guys. I mean, energy is the worst sector, but every major S&P sector is down at this hour. We've got the Fed announcement bearing down. Let's get straight to the floor show for some guidance here. Joining me now, former Federal Reserve Governor Robert Heller and Carnivore Trading CEO Dutch Masters. Robert, what are the odds that the Fed looks at the regionals today and looks at the markets and looks at volatility right now, which is, by the way, off the highs of the session, but it was spiking about 13%, and looks at the market swooning and decides, you know what, it's time to pause interest rate tightening?
I tend to disagree with you there, Liz. You said it very well, but the Federal Reserve has to balance the long-term inflationary pressures that they are facing versus the short-term solvency issues, liquidity issues at the banks. And if they postpone the increase in the Fed funds rate, they will not eliminate the need for it. So later on, it will get much worse. And like we had it under Chairman Volcker, there will be a double-dip recession. So I think the Fed should go ahead and do it.
Okay, can you just clarify one more time when you say do it? What is it, Robert?
Increase the Fed funds rate by 25 basis points tomorrow.
You don't worry that this is going to, when combined with all kinds of other issues like the regional bank problems, not to mention the debt ceiling bearing down, Janet Yellen is saying that now it's June 1st. This is a much more urgent timetable than we had originally thought. That's when the U.S. will run out of money to pay its debt obligations. We also have Stephen Mnuchin, the former Treasury Secretary under Donald Trump, telling a crowd in California this afternoon that Congress must raise the debt ceiling very quickly. So you don't worry that all of these things combined could make for a pretty serious Fed accident?
Well, we have to come to grips with the inflation problem. We can postpone the issues. We can postpone the hard lifting of interest rates upwards, but we cannot eliminate it. And later on, it will be much more ugly.
All right. We are just getting this urgent from Chad Pergram, our Fox News reporter who's on the ground at the Capitol. U.S. Senate Republican leader Mitch McConnell says President Biden has no choice between accepting the House bill or negotiating a deal with Kevin McCarthy, of course, the Speaker of the House. Dutch, listen, it's so much bearing down on the markets right now. And then you got to look at the regionals at the moment. So much for all the analysts who said that the J.P. Morgan, swooping in and picking up First Republic for a song would stabilize the markets. What are you thinking? Is there anything that makes stocks attractive right now?
Well, I have a real opinion on that, which is nice try, guys. The J.P. Morgan move was a nice try, but you didn't fix anything, and we said that from the beginning, is you really didn't step in and fix anything. So I'm going to talk about two things, Fed and then the market. I think the Fed is going to raise 25 basis points, and then I think they're going to talk very dovish. That's why we closed out our short position this morning, and we went long. We think we're going to go long. We went very long, the technology sector. And I'll tell you, I don't think that the S&P is going to go much below 3,800, and I'll tell you why. 25% of the index is technology. Apple and Microsoft, 13, 14% of that index. And the bottom line is, if you don't have those stocks go down, then the S&P is not going to go down. And those stocks have already done the hard work. They've already cut 1 million people. They're going to cut 1 million more. And their earnings came in pretty good, a little soft. Maybe growth is a little slow. But that is not the end of the world. As for the banks, yeah, there's going to be more broken banks. And that's going to be, an issue that has to be dealt with. They need to step in.
Well, yes. And the last time we talked, though, you were short the S&P. I think you had a huge chunk of all of your money poured into shorting the S&P. You're saying that's changed. Are you still long Nugget? Are you still long gold miners?
Yeah, we're long the gold miners, and we're short the real estate market through DRV, which is an inverse ETF shorting the commercial real estate market.
Well, that brings me back to you, Mr. Heller. The commercial real estate market is stumbling, at least certain parts of it. And we're talking office buildings and perhaps some shopping centers, because buildings are half to a quarter full. And that could be the next leg that could, the next shoe to drop off the leg. So what is your thought of what goes on in that meeting tomorrow that they will signal a pause in June?
I first of all hope that the Fed stops signaling. They've been signaling so much that 12 people running around, waving their arms, signaling around, telling inflation is transitory,
Good, I like this.
and telling us inflation is well anchored, and other things that never came to be true. The Fed should just stick to the facts and do what it needs to do, like Volcker used to do quite a few years ago.
Yeah, well, what do you think of our Mr. Heller, Dutch? He's kind of called it right, didn't he?
No, I love that. I totally agree with him. It's like, stop having 12 people run around saying different stuff. I totally agree.
Well, we'll hear what they say tomorrow. Guys, we cannot stress enough that we will be carrying that news conference live, and that's when the reporters start. I wish you guys were in as reporters, hammering the Fed on all the questions that we need to have. But we've got our own reporters there who will be killing it as well. Robert Heller, Dutch Masters, thank you so much for joining us.